Ruben, did you take the snap here? Damn, that's aristocratic right there. That's you're so money. So let me see. Where'd you so you got in the bar? One lot, stop, or two lots. All right. Okay. I don't think you really need it max with this one because who wants that if that bar gets taken out? I don't want it, but okay. Nice, Jordan. Nice. All right. Uh, what's next, Ruben? 1008. All right. Did you go in under the tail? Okay. Profit take three push. Which bar did you take profits on? Like which one? Which one after your last entry? Because your last entry is this bar, right? 1016. All right. Okay. And how many did you take? Two lots. One lot left. Now, is there a stop adjustment somewhere here? Like, you're not willing to let this thing rip up on you, right? So where are you going to get out if it rips up? So did you move your stop to this pivot at some point mentally? Okay. And move stop again, second whale. All right. And then we move here. You're saying you move to the next pivot right here. That's what you're considering a big bar? All right. Yeah, that's more like a solid bar, not a big bar, but okay. I'm okay with that. And then you started trailing the 8. All right. And of course, we're off the chart. Right? And you're still in? You're still in, Ruben? Well, damn. Damn. You're so money. As for stops, this could have been a stop adjustment. See? That could have been a color stop adjustment. So once you got green, red, you go from here to there, to there, to there, then 8, right? You're still in. That's staying out of the way. That's letting the stock do its thing. You just basically are adjusting, so you're saying, okay, I'll sit here now. And you're letting it do its thing. Okay, now I'll sit here. All right, now I'll sit on this. You're just staying out of the way, basically ignoring the bars. The only time you wouldn't want to ignore the bars is if this accelerates away from your 8. Then you got to go bar by bar. One lot, stop, re-entry, two lots. So you put an order down here for 1, okay, bar by bar, and then out here. I like it. I like the re-entry. So this seems to be the theme today. So if you're going to get nicked out when you shouldn't, right in an area where you shouldn't, you need a re-entry component, right? Because this is the worst place to be getting stopped out, right? Right by the 200. Right? So it's okay as long as you get right back in if it proves that you should not have gotten out. Let's take the next signal, whatever it is, topping tail bar, elephant bar, GBI, whatever the next thing is, do the next thing. Don't see bars, see flow. So look at your flow. That's your flow right there. So when you look at this, is that bounce troublesome when you see the whole movement? No, right? So getting in like you did, getting back in like you did was good. Yeah, it's like a third. What I do on an individual bar is the micro version of that, right? So I will start about 1/3 up with orders. So I'll take the middle. So here's the top third, here's the middle third, and here's the bottom third, right? So I'll take the middle third for my orders. Boom, boom, right? So that's really this in macro, right? You see these, right? And you see this? Look at your price. Let's call that 66 and look at this, right? Would you say that MU has basically run its course? So I would be inclined to think that really negative signs can go now because it's so overheated, Yeah, but after $2, like for $60 stock, it's like how far is it gonna go? You're long here when that was green, all right? So let's say you're here. So you're long here, 3 lots. We're stopped there. All right, then you're just out. Good, because it was a bad play to start with. Right, bad play. Let me ask you something, guys. Would you be happy if a trade of yours in a $60 stock ran one full dollar? You got a $16 stock running $1.20. What do you want it to go? What do you want it to go? 100 points? Like, what are you looking for? Like, dude, that's way off the charts right there already. I wouldn't say that that's like an automatic short right there, but I just don't like the trade. That's all. Guys, just because you don't like something doesn't necessarily mean that it's a short. some of my biggest losses come from little stocks, have come from little stocks throughout my career, like small, like lower. I've never had a debilitating loss in the clouds, like in the high price stocks. All of my debilitating losses throughout my career have been in the lower price. And I just don't like them. And that makes sense because, like, to get the same alpha, I've got to play bigger to make it count the same way a $200 stock or a $150 stock. I got to play a $17 stock exponentially larger to get the same potential. But if it goes bad on me, it's worse. It's I just don't like them. I don't like playing the lower prices. That's why I tell you, like, basically 30 your range should be $30 and up, really. And you should not have a lot of 30s, like one. Like the majority of your list should be 60s, 70s, 80s, like that. It should be middle heavy, portly, you know? Let's see a portly dude like that. So you got the 30s here. You got maybe the up to 150, and you want the majority here. That's the majority of your stocks in your list. So you want the middle heavy, right? But I wouldn't go below 30s, really. I explained to you why. You know, it's a miracle you get a dollar there. That's a miracle. You get a dollar in the lower price stock. So you want where dollars are frequent. So to carve out 50, 60 cents is easy if you're dealing with a stock that travels dollars regularly. That's the way you have to think of it. You're not going to get the dollars. You need something to go dollars to be able to easily get 60 cents. So if something goes 60 cents regularly, then what are you playing for? 10 cents? 15 cents? So it just doesn't make sense to me. The Ranger says a lot of retail novice traders play those stocks. Yeah, that's why they're retail novice traders. Tyler, you got stopped out on Cisco? Let's cover that, Tyler. Okay, and what part of the bar? Top, middle, bottom. Okay, 2 lots. I'm assuming there's your stop. Add 4 lots on bar 3. Boom. All right. Took profits at 50.35. All right. How many lots here? 2 lots. Okay. Move stop there. Okay, and stopped out 4 lots here. Okay. Yeah, the snapback was vicious here. Vicious snapback. Yeah, but it's pretty vicious there. It's not normal. You know, you shouldn't be taking out that bar. It's weird. 2 lots. Okay. David, you could have trusted the Baba one because it was free. PayPal wasn't free. I get that one. But Baba was free, right? Nothing to the left. 942, 44. Okay. Boom. I like that. You know, your stock has run a long way here. And so this is kind of like one of those, that's that whale. So instead of you getting a pullback and going to the whale, you just get the pause and you go to the whale. But you know, you're running $3 here. It's huge. Good trade. So David, yeah, if you're going to trust the up, this is the one you trust because you got nothing to the left and the gap is originating from a narrow state. So it can gap and run. If the state was wide, you doubt the gap. You can doubt the gap, but when your gap is born from a narrow state, it can gap and run. Higher odds of a gap and run.